right, we are back, guys. Back for another episode of Monday Madness. Monday's Madness, episode 3. And I am Coach UV, brought to you by the Unique Trading Group. I appreciate you clicking on this video tonight. You guys are really in for a good one. And tonight, I have a 3-minute strategy. 3-minute strategy for this Monday Madness series for tonight. 3-minute strategy to help you find the best entries and the exits, and to see how we can fit our methodology, our trading style inside of the 3-minute time frame. So don't worry, I got you covered. All right. Remember that this is the Unique Trading Group. Okay, the Unique Trading Group. Why are we unique? All right, because this is where strategy meets mindset. Again, strategy meets mindset, and discipline turns into income. That's essentially what you have. We focus on price action and market structure. But I don't want to hold you guys. I know what you came in for, right? So let's hop into the charts. SPY. SPY is what we're going to be focusing on. Okay, SPY is what we're going to be focusing on. Today we had some crazy moves in the market, and we're going to go over all of that. Okay, and first and foremost, as I like to do sometimes, I like receipts. I gave out a couple of videos, one in particular last week, and we're going to check out that video. It's called Halftime Show. I want to give out some receipts and some proof of some of my guidance I gave out when it pertains to SPY. Quickly, we're going to get to that, and we're going to jump right into the video. Remember the 3-minute strategy, Monday Madness. All right, make money and turn discipline into income on a 3-minute time frame. I'm going to show you how this played out today. But first, let's check back on the earlier video and see what I was talking about. Here we go.
How breaches from these levels. All right, let's take these off. All right. If price somehow breaches, let's put the volume profile back up there. All right. Remember, the volume profile is a future forward thinking indicator. Okay. And we have a thin zone right here. Okay. So if we could break 520.32, 520.32.
It was 520.32, right?
Right. Anytime tomorrow or pre-market, wherever it happens at, it's going to be a spot where price rejects from. Okay, and we can get a flush back to the downside.
We can get a flush back to the downside. This was recorded last week on Wednesday. Let's continue the video.
503. I am looking for 503 now. Today being Wednesday, right? Today being Halftime Show, episode 3. You never know what you could get, right? These moves could happen tomorrow, next week, Friday, Monday, all right? But
I said Monday, right? All right, because I like to give out a couple of scenarios when it comes to price action. You know, there's a lot of people who are bullish, and there are a lot of people who are bearish. I like to teach my traders to focus on process. The process more than profit. The process more than profit. All right, because this is essential. Understanding risk to reward, having a plan, all right, and waiting out for your moves to happen, and trusting your trade. Very essential part of trading. All right, here's more proof.
Friday, remember, we do have the COT report, all right, and we do have more data coming out and more earnings, so be aware. All right, today was a bearish day. I gave you guys guidance on that. Remember, we had a head and shoulders pattern and a bear flag measure move to the downside, and the numbers I gave out in the Discord and in my guidance played out. So you guys could have made some money. We do have a gap here. All right, we have a gap right here.
All right, we try to touch this gap almost today, guys. Here's more proof. You know, I explained to you that there was a gap on SPY to the downside, and gaps act like magnets. All right, ranges act like magnets, and these are nothing but previous ranges. Okay, previous ranges and imbalances in the market. All right, and so enough of that video. I think you get my point. Okay, and what do we have today on the SPY? Today we had momentum to the downside. Okay, the previous close, which was 526.41. all right, that was a previous close from Thursday last week. And if you guys know, and even if you don't know, the price of SPY, the closing and the opening price for the daily and or the weekly time frame is a proxy we use, all right, an edge that we like to use to go bullish or bearish on the market. If we are below the closing price, we like to take a momentum trades to the downside. If we are above the previous close, then we like to say that's more bullish momentum. All right, the bulls have taken over. All right, and since today we got some breaching of certain numbers that I previously called out, I wanted to look bearish. All right, so I used the previous close, and I also used the volume profile and that 521 number that we gave out today. All right, that I gave out on the previous video that you just listened to on that last video. That was the price that we wanted to watch for. So let's just say we got into that trade. And remember, this is Monday Madness, episode 3. This is the 3-minute trading strategy. Simple, a stupidly simple exercise that you could use strategy on a 3-minute time frame. All right, and so let's check some of these numbers. Okay, remember we had numbers from last week on Thursday. All right, I insisted that we needed to stay above 526.50, 526.41. all right, in order for us to go to the upside. Well, we didn't get that. Okay, we didn't get that at all. All right, last week, all right, Friday the market was closed, so we consolidated here. All right, we consolidated in this area. All right, and then market opened up today. All right, now remember that number I gave out. Okay, so let's just say you're watching for these numbers to play out, so you can have a idea or a chance to know, okay, so if this is the breakout point for the numbers I gave out, right? And remember, the previous close is 526.41. This is our edge. This is what we're using to gauge whether we want to take a trade to the upside or the downside. So let's say you wanted to use that. You were honed in on this trading strategy and you wanted to use it, all right? Of course, you see simple things like, here's a lower high rejection. Here's another lower high, right? You see all these things, but you notice these patterns and have an entry. Your entry is here. All right, these are the patterns for confidence to know what we're doing, but your entry is there. I'm gonna say that again. Your entry are the numbers you're using to gauge calls or puts or to the upside or downside. You're using your daily closes and open and your weekly closes and open to gauge your direction, your trend. But market structure gives you, right? You can see your trend and also the market structure is more confidence, but the numbers give you your entries and your exits. All right, and so let's assume we did that. The market opened up today, all right, around here. The market opened up, all right, around here, all right, April 21st, Monday. But this happened while we were sleeping, after market, all right, pre-market, all right. We fell below, all right. Look right here to the right of my screen. You see that gray box, all right? This is 2640, all right? Right around the same area I gave out, right? 2650, 2640, all right? And we have made a drop below the 21 at that same number right here. All right, we dropped all the way to 520, all right? We even passed the 521 number that I gave out in the halftime show episode 3 last week, all right? But then we started hovering here. And so what I was doing this morning, right before the market opened, is already telling myself, all right, on a 3-minute time frame, what I want to see is I want to see these pre-market lows get breached. And so what I did on my Webull account on my phone, okay, I put these here for the range, all right, and I wanted to see this range get broke on a 3-minute time frame. This is the stupidly simple trick that I like to use to make quick money in the market, because most of the market moves that happen on different time frames, they happen on a smaller time frame as well. All right, we just have to identify this setup, manage our profit while we're inside of the trade or before we take the trade. All right, make sure that we're managing our emotions and just stick to what we're doing. Be very precise and calculated on what we're doing, and never hesitate when you take a trade. When you see a setup, never hesitate. All right, and so on the 3-minute candle, I seen this breach. Right now, this breach was right below our 521 entry. All right, first we have our first confirmation, again 526.41. Anytime we're below the previous close, we want to be thinking bearish. Okay, don't get tricked, don't get fooled. All right, and always make sure that you're protecting your money and make sure that you have defined your exit to protect from losing money. All right, define your risk as well to accept what you're trading with. All right, accept that loss. All right, and accept what you're putting into the market, and also define your targets. You want to know where you want to get out at. And so right here again, the 3-minute time frame, I seen that the market dropped past our numbers we gave out. I put a box here over this range of price from the pre-market, after market. As soon as I get this drop below, right below my 21 exponential moving average, that's my trigger for puts. That's my first confirmation, second confirmation, and the breaking of this box. And that's exactly what we got. We got a flush to the downside. All right, the ATM sound. It sounds a little bit like this. Take some profit, retrace back to the 21. All right, get back into the trade and or add to your trade if you didn't take profit. All right, and we had another ATM sound. Say it with me. All the way back down here, right? And we have what you call a bear flag measured move. This is a pole down. This is the flag and a measured move. This leg down right here. Pay attention. Stay with my cursor. This leg down mimics this move right here. Okay. This move right here, all right, is mimicking. All right. These two are mimicking this leg down. Okay. And just to make it more clear for you, so you won't be confused, here's the flag. All right. Here's the flag. All right. That's the flag on the play. All right, that's the flag. All right, and once the flag breaks right here, that's your entry. See, there's another cool thing. All on a 3-minute time frame. Okay, write that down. Okay, bear flag, measure, move, and do some studying for you. Yes, you listening, whether beginner, intermediate, or advanced. If you're advanced, then obviously you and the immediate traders, you guys know about this trade. But for the beginners, they don't know. And I'm showing them some things. And the great thing about this video is you can play it back over and over and over as much as you like until you understand. All right, and you can also paper trade. You can paper trade these types of movements and test out these theories or these methodologies rather to gain confidence and see how they will work and how you can execute on them. It's called paper trading. It's a simulated thing on a brokerage account that you can do, right? Whether it's Fidelity, Webull, Robinhood, Moomoo, any of these brokerage accounts, you can start an account, right? Call customer service, right? On any broker, you can call customer service and ask about paper trading, and they'll let you know exactly what it is, a simulated version of the real market, okay? So now that we know that, and we had our two-legged pullback here, our bear flag measured move, all right? This is where I took some profits at today, okay? I was already in puts, okay? Pretty much made over 60% today on puts, all right? And again, this is episode 3 of Monday Madness, 3-minute strategies, 3-minute strategies, all right? Hope you've been enjoying the video thus far, all right? If you have, hit that like button, all right? I make videos like this all the time, and if you feel like this video was valuable, make sure to subscribe to the channel and check out my links below. Check out my options trading book, all right, that I put out for the trading community about last year. It's called The Power of Paytience. And if you want to join a community of like-minded people and trade alongside with me, all right, hit that link below in the description and join the Discord, the unique trading group. Now, I'm not going to hold you any much longer. I just wanted to finish this video off, all right? Now that you see how we got into our trade, what gave us our confidence to stay in, all right? We see the pattern, all right? And then we have this double bottom here. Now, there were going to be some profit taken today, of course, because we had a big move down. You know, think about it. 521 all the way down to 510, 10, 11 point move on the market, SPX or SPY. That's good money, all right? A day's pay, so you can expect some profit taking. Profit taking happens, doesn't happen right away where it shoots up here, right? Gradually. Take some off, market goes in the flow, right? Create another bottom here by the volume point of control, the POC, which is a volume point of control is a future forward thinking indicator. If you're wondering what this was on my screen, the gold and blue bars represent the most volume. Of course, you see the bigger gold bars, you see the most volume, where price is going to react to the most, okay? And you form the bottom here, bottom meaning a place of demand. All right, price can continue upside. It's no longer wanting to go down anymore once it finds a place of demand, okay? And you see that clearly here with the W shape, all right? A W shape, all right? That's a W shape. A W shape is a bullish pattern, okay? And it means that the bears are getting exhausted, all right? And you want to take a trade above the breakout, all right? Above the breakout. That's the neckline. All right, this is the neckline. All right, example. Okay, so let's make sure we're clear on this. Make sure that we're clear on this. All right, so everybody can see. All right, this W shape is a bullish pattern. Here's that same W. Right, you want to take a trade above here, just like right here, the neckline. Can you see it? Can you see it right here? Above the neckline. Let me circle this whole thing. Uh-oh, there's a little sloppy circle. Let's try that again. All
All right, we're gonna make this circle around the area, and I want you to notice, okay? I want you to notice the W shape. Notice the W shape, okay? Same as this one. And we want to take a trade. We want to take it above. Bear with me as I navigate this screen. All right, we want to take a trade above here, the neckline. All right, this will be our entry above here. Now, let me clear all this off. Looking at W's, right? Okay, taking all of it off, okay? Your entry on a 3-minute time frame, if you miss, see. All right, we're gonna make that a green line because we want to take calls to the upside. All right, price to go up. Green means go up, right? All right, if you missed the trade that I just talked about, right? All right, if you missed the down move this morning, if you didn't play my guidance from last time, all right, from last previous video, right, where I gave you some pristine guidance. If you didn't make this trade, you could have got the next trade if you know these patterns. So study this video, guys. Appreciate you rocking with me thus far. Hope you're enjoying it, you know. Pretty valuable video, I think. All right. Now back to the lecture at hand before we close it out. That's the W shape. It's a bullish pattern. The bears are exhausted. The entry would be a bounce off of the 21 or entry above the neckline break. This break of this high and a break of that high. And what do you have? Some sort of bull flag measure move, the same way we had a bear flag measure move. So we can really do that tomorrow, all right? Bear flag measure move, or we can reject from right here, fall back down and retest these lows, all right? We have gaps in between, 511, 510. We also have liquidity at 509 and of course 508, all right? Do we have to get there? No, we do not, all right? But it's about having scenarios and adapting whenever the opportunity presents itself. So if we wake up in the morning and price is below here, we know where to look for. If price is above here, then we know where it's trying to go. Why? Because this is a bull flag measure move, so you want to get the extension of the pole and measure it to the upside, all right? And also understanding that profit taking can occur with these lower highs you see on a 3-minute time frame, all right? So trading does not have to be hard, guys, okay? And I'm going to end this video here for this episode of Monday Madness episode 3, all right? Hope that you guys are going to be prepared for tomorrow. Remember, if this video I gave out some good information that you're not familiar with, it's all right. Look at the video time and time again, go back, take your time and refresh it to digest some of the information that I'm giving you, okay? It will make more sense, all right? Always define your entry, your exits, and your risk before you take every trade, all right? And remember again to paper trade. This has been an episode of Monday Madness, all right? Monday Madness episode 3, 3-minute strategy that you can use, a 3-minute strategy that you can use to take control of your trading and to make some quick money. Now, this is not for everybody, but for those who are listening, I hope you take heed to this, okay? You guys have a blessed day. Thank you for watching. Again, hit that like button, hit that bell notification, send it to a friend or family if you found value in this video at all, and stay notified when I drop valuable videos in the future. It's your boy Coach UV, and this is the Unique Trading Group. And until the next time, peace.